are going to bring forward about 200 billion yuan of spending from next year into this year. But what we didn't get are these details of any kind of major either new funding or more details about what kind of fiscal stimulus Beijing is really going to put behind the stimulus package that, as you mentioned, Girish, we saw at the end of last year. And actually, worth pointing out, the NDRC is not the venue for these types of announcements. It doesn't actually have a mandate to announce these kinds of things. But because of the unusual ways that policymakers have acted of late, the unusual urgency that they've taken to announcing measures, there was more of this expectation that we could see something more substantive from the briefing today.
Well, speaking of matters of urgency, you mentioned earlier that they've actually taken 200 billion yuan, that's about 28 billion US dollars from next year's budget. Is that a sign of panic?
Well, look, 28 billion US dollars is really just a drop in the ocean. When you think about the kinds of numbers that economists were forecasting that they're hoping to see from this fiscal stimulus package, you see 2 trillion yuan from Morgan Stanley, 3 trillion yuan from certain other US banks there. That has gone up to somewhere near 8 or 9 from other sort of economists, Chinese economists talking about what potential firepower Beijing could use. So in that context, 200 billion is in fact perhaps even a worrying sign for some investors who are kind of looking at that thinking, is that all?
Yep. And also, what do you make then of the reactions in the markets today? What are they telling us? There were gains on the mainland, but big losses where you are in Hong Kong.
Yeah, absolutely. We were eyeing this really closely, essentially, to see China has been on holiday for about the past week with the Golden Week holiday. And so what we were watching for is whether or not the onshore markets would catch up with this big rally that we've seen in offshore markets, so in Hong Kong. And in fact, actually, although we came out the gates roaring with those onshore Chinese indexes, they hit near to 11% in one key index. They actually paired those by about halfway before the briefing had even finished. So that indicates the kind of recalibration that we were seeing even among the sort of more enthusiastic onshore Chinese investors. Offshore, we saw a much deeper recalibration. So stocks erased almost all of the gains that they have made up since we had that big stimulus announcement back at the end of last year. But just to put all of that into context, even though we've seen some of this disappointment today, not just in the stock space, but also in the commodities, many Chinese assets, particularly in equities, on the month returns are still seeing something around 25%. So although we've had this quite dramatic pullback in some areas today, contextually, we are still on track for one of the best months in a really long time for Chinese asset classes.